Hello friends, so you are once again welcome to my channel. Today we are quickly going to go through our third smart money concept terminologies and the concept. So one of the concept that is really very important to note is the order blocks. Okay, so today we are going to take our time and look at order blocks. All right, so if you are here, I would like to say that you're welcome. If this is your first time tuning in here, I would like you to subscribe to the channel and then give a like to this video, and then you can go back and watch other videos that I have posted, which will be very healthy and very good for you in your process of learning to become a good forex trader. In the process of learning to become a good forex trader, I know that you come across a lot of mentors, you come across a lot of videos that teaches a lot of stuff, but with what is taught on this channel, if you are going to really dedicate time, I'm not going to promise you an easy way to becoming rich or a quick way to becoming prosperous, but if you are going to dedicate time to learning and studying all that I teach you here, I believe you are going to become a very fruitful and a successful trader. Most traders drop off the line after trading for, especially new traders who come on board after trading for 2-3 years. They notice that the losses outweigh the profit they make, so it makes them quit. But if you are going to really be successful, I know that what I'm teaching you here is going to make you successful. All right, my mentor is called Michael, and his concept is now worldwide taught concept, and I believe that if you are going to dedicate your time to learning these things, you are going to be a fruitful forex trader. And this concept that I'm going to go through with you here is applicable on any forex pair. Okay, any asset pair you can name on the forex market, this concept works. All right, so let's take our time and go through today's video. We are looking at order blocks. So basically, order blocks, they are areas on the market that institutional orders are placed, where large funds or large traders, institutional orders are placed to move the market to a certain direction, either for a long position or a short position. That is either to buy or to sell. Okay, so let's go to our chart so that we would practically understand what I'm explaining. All right, so when we talk of order blocks, so for instance, large institutions place trades at places where you would easily not identify that this area is an area where large institutions have placed their trades, and they are waiting for the market, or they are waiting for the market to come back to that area and then rally the market to a different direction. Okay, so now let's look at this market. So when we talk of order blocks, we are looking at areas where, so for instance, a typical example, when we have, for instance, we have market trending upwards. Okay, let me use my annotations for you to understand them well. So we have market, for instance, we have a market like this, market moving from this point to this point and all the way up. So we could see that the market is trending upwards, right? Good. And then we see a market, the market drop all the way to this point. Now the question you ask is, why has the market dropped to this point? And then market reverses. Okay, so let me leave this here and then probably try and then use another. I wish I could change my color, but nonetheless, let me still stick to the color. Let me change the color to blue. Okay, then suddenly we see this movement this way, and then the price begins to drop. Now the question you ask yourself is, what has happened that price is dropping? From this point, you could see that the market made some U-turn around this place. Price began dropping. What actually happened around this area? Okay, so to take you deeper, there was where this is an area where institutions began to place their sell orders. Okay, the large institutions. This is where they began placing their sell orders. They began placing their sell orders around this area. So you'll notice that right after the move up, market actually fell. Okay, right after the swing up here, after the rally up, market began to change course. So where the large institutions, large funds took place is around this area. Okay, so now let me go deeper for you to get the concept well. So as you saw, the market was trending upwards nicely. Something happened, and we call it order blocks. So basically, when we have a market moving this way, okay, when you have market moving up this way, and then suddenly you have the market dropping in this premise. What happens is that from where, for instance, if these are continuous bullish candles, from where the last candle that was formed is that, for instance, if this is a bullish candle, from where the last bullish candle was formed to where price began to fall, there is an area of interest where institutions, for instance, if this was a short term, so for instance, if this was a short term or a long term low, and then the low has been breached, usually what we would know is that from this high there was an area of interest where large traders began to place their sell orders to change course, that now we are no more going to continue up again, but we want to go down. Okay, so they change course, and these candles or these price actions here, there is an area of interest which the institutions actually begin to place their orders. That is the area where we will find what we call the bearish order block. So for instance, if the order block is formed to take price down or rally price lower, we call it a bearish order block. A bearish order block. So the bearish order block will rally price lower. So here we have price rallying lower, closing down below a long-term low. Okay, so how do we identify the order blocks? So let's come to the chart practically and see how we would identify order blocks on the chart. Okay, all right, so now watch here. So I'm going to pick a very nice order block from within this area where we had, so from this bullish candle all the way rallying up here, when we have continuous candles rallying up and then there's a sudden rally down to break the low, all the continuous candle in there are regarded as the order block. Yes, they are all regarded as the order block. Okay, so this is one continuous order block. Usually we would regard the order blocks to be consisting of the last bullish candle. So for instance, and on most notes, we regard the order block as the last so for instance, in this note, we regard this last order candle, bullish candle here, as the order block. Okay, now let's go down to a smaller time frame and look at what I'm talking about. So in this note, on this note, we regard, for instance, you saw this on the weekly time frame to be the last bullish candle. But look at what you are seeing here. You are not seeing one bullish candle, but you are seeing some series of candles continuing here. All right. So you see this and this candle. So sometimes on the smaller picture, you see it as one candle, but when you beat down the time to a smaller time frame, you see that it is more of a series of candles. So this is what you see on the weekly time frame. But on the monthly time frame too, you won't see anything of that sort in a way there. Okay. But when you come down to the weekly time frame, that is what you see. You see one last candle forming the order block. But practically, the continuous order candles that forms before the rally away is what constitutes the order block. Yes, you may have your own argument and you may have your own doubt, but that is how order blocks are formed. Now, let's look at where sometimes the institutions or the volume of the trade, the volume that constitutes where the institutions place their orders. And you watch a lot of videos but you won't see this. But one of the times my mentor Michael explained it clearly that where the volume of the trade is found is usually the last bearish candle that is formed before the movement up, or before the continuous movement up, or before, for instance, it could be only one candle. So this candle could have been just one continuous candle, but the last bearish candle here. So on this note, this is where we find our order block. So this continuous bearish candle movement up, this bullish candle movement up, this last bearish candle here, this is where it contains the volume. So this is where the market makers, the large institution funds began to place their sell orders. Okay, so when they place their sell orders here, then they will manipulate. So all this area is called the manipulation. So they manipulate the market before the rally down. So this is where they did all the accumulation. They accumulated all their orders here, the power of 3. They accumulate all their orders here, their sell orders here, and then here they manipulate the market for everybody to believe that price is rather going up. And then what do? And then they sell. That is the correct distribution of the price. So the large funds are actually resting, usually, not always the case, but usually when you see this last bearish candle here before the rally down to take sometimes a long-term low like this and like this, the orders are residing in here. So anything above this area, the volume of this candle, is not really sustainable. So you will notice it from this chart. Let me zoom out and then show you. Now let me annotate this area, and then we'll zoom out and then go down to a smaller time frame and notice all the changes that will take place on the smaller time frame. Take note of all the good. So this is the top of the body of that candle, and then this one comes the low of the body of that candle. I want you to stick to this video because you are going to learn more from this video, especially those of you trading forex, any of the currency pairs, and any of the synthetic indexes from volatility 100. So on this asset pair, it is volatility 75. Okay, for those of you who don't know about volatility 75, is one of the asset pairs that you can trade on the market. All right, it offers very good liquidity. The movement is very good, unlike forex market that is affected by news, and the movement of the pair is usually affected by news. Synthetic index pairs are not affected by news and they trade smoothly. All right, they have a lot of liquidity all the time. So I encourage that if you've never ever traded synthetic index pairs, you can give it a try on their demo account, and then you can take it from there. All right. So now let's go back to what we are talking about. So I was saying that, so this continuous candle here is our order block. So for instance, from this candle all the way up is our order block, right? Good. Now let me try and point out a few things in there for you. Now look at this continuous uh, order block all the way up here. Okay, you could see that the mean or the middle, I'm using only the bodies at this point. I'm using only the bodies as, so the bodies of the candle is the one that contains the volume. Okay, so I'm using the bodies of the candles as, so let me put this line here indicating the middle of the continuous candle. Now let me also come down to this particular candle, the last candle here, the one that on which we are considering. So now look at the middle of the mean threshold. The middle, when we say the mean in finance means that the middle. Okay, so when you look at the mean of this particular bullish candle here, which has more volume to make up the order block or to be part of this order block, this is where the mean is. Okay, this is where the middle ends. All right, so take note of all these two different areas that I have delineated. Okay, it will give us some a little bit of insight when we go ahead. Now let me go down to daily time frame. Okay, on the daily time frame, this is where we are. Now this is where our order block on the weekly time frame was found. Okay, so that's why we indicated with this colors. So when price broke down, it broke down on this area. Okay, price broke down on this area, and then, so let me go back to the weekly time frame for you to see what I'm talking about. So this is where price traded down before it traded back into this area and then came down again and traded back again into our area of interest. Okay, where the institutions had placed their sell orders. So let's go back to our daily time frame. So this is it. This is the area where the institutional orders had to place their sell. Okay, good. Now let's come back. Price broke down, price retraced back into the order block or the other area. So take note, I told you that any price above that area where we saw that bearish candle, which was the volume of all their sell orders, which was the price where price accumulated all the orders. Any price above that level is not sustainable. So you notice that when price traded into, it left just wicks above it. And what did it do? It touched the mean of that long. So usually when we have candles with a lot of body or volumes, we expect price to usually go back into the mean of those candles. Okay, good. Now watch this. So price traded and came here just above this particular price point, just above it, and then it wasn't sustainable and price broke down, came back into that same order block again, and now it couldn't even trade above that volume. And then we took all, so when price comes back into this area, what price is doing is that price is actually going back to trigger all the sell orders, and then they rally down, comes back to that same area to accumulate more orders in that same spot, and then price rally down, price came down, came back into that. So price traded back to that point the third time beautifully. So in consideration of an order block, you should always look at some of these things. That does price have a bearish, if we are looking at a bearish order block, does it have an area where price accumulated more orders? It is not always the case. I'll show you examples that is not always the case. But when it has this, it is more of an affirmation. It gives more confirmation. Okay, so look at these ones beautifully. Another thing that I have to add to is this, that when we have order blocks, okay, when we have, for instance, you've seen that price has traded into this place, and then while we are considering this continuous candle as an order block, is that number two, apart from the fact that it has some bearish candle accumulating order before the rally up, Number two is that it usually takes down short-term lows, or it breaks structure. So one of the next video that we'll look at, or the next lesson that we'll look at, is the break of structure, or market structure break or shift. Okay, so now look at this. So for those of you who don't understand the market structure I'm talking about, let me quickly show you here. So before I started, I was trying to draw this, that market was moving up. So you usually say the market is trending upwards, okay, and then what happens? It moved up all the way this way. So usually when we have a trend like this, this is a low, this is a low, this is a low. When price is trending upward, or price is in a bullish movement, or it's an upward movement, price doesn't take the previous low. So for instance, this is the previous low. When price formed a low, it didn't take down this low. Then when price formed another low, it didn't take down this low. Suddenly price breaks down and then wipes the previous low, which means that we are no more in that market trend again. The trend has shifted. All right, so basically that is it with market structure shift. So when you have price shift in the market structure, the order block that is formed becomes a very valid order block, because it has caused a shift in the market structure. So when you identify order blocks that has been formed before a shift, it validates that the order block is more valid. Either it has swept a low more often, or it has gone to take down a fair value gap, but I prefer that it takes down some long-term low. Okay, this was a long-term low which wasn't supposed to be violated, but it has been violated, which means that there has been a structure shift. So it validates your order block. Okay, so one of the things you should know is that when price breaks a structure, whichever order block is formed validates your order block. And the third thing to add is that when you have a fair value gap, which I've taught about fair value gap in my previous video if you have watched, when you have price breaks structure and then it leaves a fair value gap before or just after the block, it validates it even the more. So beautifully, when price formed this low, price came down to break the low, confirming this our order block. But before then, you could see that there was a fair value gap. Let me zoom out and give you a clear picture here. So when I said fair value gap, you would understand that should we say that price was around this area, we knew that all this from this point to this point was an area of trade where price had not traded into. So from this particular point to this particular point, we have a fair value gap resting in here. Price traded just once, so we needed price to rebalance. So this is a sell side imbalance and then a buy side inefficiency. So the sell side is not balanced, but with buying side too is inefficient. So price must efficiently deliver. So what happened? Price had to trade back into the order block and deliver price efficiently. So price traded back into the closed in on the fair value gap. So when you have a fair value gap before the order block, it also validates your order block. So now you could see that two things. First of all, there was a break in structure. Second, there was a fair value gap resting just before the order block. It's even validating it even the more. All right. So fair value gap, order block, sometimes some of the places where you consider as order blocks are not really order blocks, because look at it carefully. Has it violated? Has it broke a structure? The order block, has it really caused a break in structure? Does it have volume even before it? Does it have some sort of accumulation before it? Okay, that makes your order block more valid. Now let's look at this order block that we're considering. We're saying that this area is an area where it has more volume, and then price traded back into the volume and then it was rejected. Now let's go down to the daily time frame and even confirm it further and we'll find more other blocks even on the daily time frame. Okay, we'll find more other blocks on the daily time frame. Beautifully, look at this area. Price traded into the other block and then left this long bearish candle, and then this also formed, traded into this, and then what happened? Look at the area where price traded into. Price traded and took down all the low resting below this. It's a short-term low. Price had to sweep it. So watch this. This was the low that was used to raid or to change the course of our market structure. Now price, when it traded into the other block, it began to also sell. Now watch this. Price traded back into this other block. Sorry, price traded up into this big order block that we are considering as order block. It traded into above the volume. It was rejected. Look at this area too. The same thing, it was rejected. Now we are already in the sorry, I want to show you something. We are already, when price traded down this way, we were already in the trend of market falling. So now I won't say that price had taken down a low or had changed course, or it has changed a structure, or it has shifted structure. What it just did was that it just trading in the course of the same direction that it is supposed to go. So price traded up this way, and then what did it do? It rather traded further down. Although it has swept this low, but I'm not saying that it has broken any structure. So look at this. When you bring price into this, we are not saying that this area is an order block, because it is not, because we are not saying that it has taken or it has changed course of the trend. It is still in the same trend that we are in. All right. Now, beautifully, come here. You will see a very powerful order block which has been formed in this area, and then I think I'll give you a last area of an order block which has been formed. This is on the daily time frame. So look at this side. On the daily time frame, you saw market trending upwards, moving all the way this, and then we had suddenly the market shifted down on this particular candle. So let me show you the trend. So on the daily, we saw another trend. Okay, so we can say that we started all the way from this point, and then it was coming down from this point, and then from this point to this point, to this high, and then to this low, and then all the way to this high. And then what happens? Price breaks down the low at this point. So this is where the low was breached. Okay, this is where the low was breached. What happens? Market trade back into an area where we have an order block residing, and beautifully, price couldn't stay in that area. It traded into the order block which was in this area, and then what did price do? Price continued rallying down. Let me take away all the drawings on the chart and zoom out for you to see well. Sorry. So watch this order block. Now, this order block is already traded into another order block. I hope you would remember. It has already traded into another order block. Okay. And prior to that, you could see where price was accumulating orders in this area. Price accumulated orders, manipulated, and then it did the redistribution in this area. Good. So watch this. You see the scenario we set in the first place. We're using some continuous candles, but it is not always the case. In this situation, we have the last bullish candle being the bearish order block. because it's the only block, is the only candle which was formed here. Yes, you can consider this little bullish candle here as part, but on the more note, this particular candle is the one that has more volume, or it is the only one that has volume. It has, how, which word do I use? It has volume, like it's bigger, it's larger. So we use larger candles. Okay, good. So look at this area. Even if we are going to consider this bullish continuous candles as, now where is the mean? The mean is this side. The mean is the middle. Okay, so look at this side. What it means is that when price trades into the mean of a particular continuous bullish candle, anything above it, if it is an order block, is unsustainable. So look at this particular price area. Yes, this time round, price didn't respect the fact that, yes, this was the area where price actually, the volume, or where price, where price or the market makers began to place their sell orders. Let me also indicate it for you to see. So this one too is there are two continuous bearish candles where I'll consider both. Okay, good. So look at this. Price didn't respect it. The body of the candles traded above the volume of where they began to place all the sell orders. And then what happened? Yes, but they traded into the mean threshold. Anything above it was unsustainable. Let's look at it on the smaller time frame, which is like 4-hour time frame. Sorry, my chart had to go back into time. I have to take my time and scroll back to find this. Okay, beautifully on the 4-hour time frame. On the 4-hour time frame, we have that. You see, on the 4-hour time frame, it will also give you more picture and more refined. As you go down on the smaller time frame, it gives you more refined area of trade where you can even refine your entry with the other blocks, especially if you have found, for instance, we consider this whole area shaded white as our order block on the daily time frame. Now when you come to the 4-hour time frame, it is even more refined to give you a more refined entry. Now look at this. You have all this movement in here, this accumulation in here. Yes, we still have one bullish candle before the rally down. So for instance, this bullish candle here before the rally down forms our this bullish candle before the rally down forms our order block. So this bullish candle, there's a fair value gap left in here. Price traded a little bit into it, and then watch this. Price traded into closing on fully on the fair value gap, and then where did the wick of the candle trade into? The wick of the candle even dipped further deeper into the order block before the rejection. You can say that this candle is too small to form an order block. Nevertheless, you can still consider this other candle here with more the beefy body to be the order block, and you can see that even with this, price traded into the mean threshold of this particular candle. So at this point, you could have considered, for instance, prior to this was this low, this high, this low, and then this area, and then price broke down. Before price broke down, we have another lecture that we'll look at is mitigation. We have this mitigation block, okay, where price trades back into. So before this last bullish, which has the high, can be considered as the order block, price traded and didn't even touch, but when price traded into that particular, the mean threshold of that, the one that formed the high, the mitigation, what happened? Price dropped. So look at it. Price traded into the middle of this particular candle here, and then it dropped. So with the other blocks, you can refine it further down to get all that you want to see on the smaller time frame. All right. Okay, so beautifully, let's look at what I was talking about here. So when price broke down the low of this point, price retraced back. So this one even gives us a very concrete evidence that irrespective of how price is going to be, it's not going to break the high here, which makes this particular candle our order block. Which makes this, because price was trending upwards and it broke down a low. It broke down a long-term low, which is this low here. And it gave us the confluence that price is going to trade back into the mean threshold of the order block. It traded even above the mean threshold. And when we look at the smaller time frame, we saw that there was some fair value gap price had to close in, and price went to close in on the fair value gap. That is why it even wicked further, because it will gather more orders above and then it rallied down. So that is how order blocks work. So for instance, in this account, you didn't see any fair value gap resting in here on the bigger time frame, but the account is that it has broken a long-term low, or it has shifted a structure. It gives us the confirmation that this is an order block. Okay, so guys, beautifully, this is what I will regard as order block. Now let's look at this particular price action on a smaller time frame. I want to give you an order block that yesterday, for those of you who watched yesterday's review on volatility 75, I told you about price closing in on this fair value gap, and we are looking at if it has to close in on this fair value gap and then rally down. However, price can close in on this fair value gap. If it closes above this high, we are looking at price continuation up. But then if price closes below this particular wick, which is this Friday's candle, I'm looking at price coming down to close in on this fair value gap resting below. Why am I saying that? There is a fair, so let's look at our price action, what I just explained. So we have price. Can we find an order block in this area? We have price rally down this way, all the way up, and then it rallied down this way, and then it formed a high here, high in here, and then another high in here, another low, and then it formed a high beautifully here. What do you think has happened? There has been a shift in the structure. Okay, then market retraces into this area, and then it's just lingering around or accumulating orders around this area. What do you think is happening on the market? Now, can you see an order block inside this area which was used to run this high? Yes, this particular candle here is considered as an order block. Now let me wipe my chart and then we go there and see what this order block is. So beautifully, can you see that prior, so this one has a fulfilling, this one has an element of what we saw on the previous, I explained in the first part, which has where price actually accumulated all the orders before the manipulation and then the rally up to take down this high. Okay, so price accumulated orders here. So price accumulated all the orders it had to accumulate. Sorry, I had to take this off. Price accumulated all the orders it had to accumulate in this area before the manipulation and then the distribution. So we consider this particular candle here as an order block. Just one, this particular candle, this bearish candle here as a bullish order block. So with price trading into it, we should expect a rally away. Now let's go down into our daily time frame to see what exactly is in there for us. Should price trade down? So should price trade down into this order block, which is the weekly order block, we are expecting that it should either trade into the volume, or not either, price should trade into the volume of where there was the accumulation, and anything below that area we should see that it shouldn't hold water. But in this case here we have we have an area where we call a fair value gap resting in here. This area all the way down to this area is a fair value gap that price had to close in. So we expect price to close in and trade even down into this area. So our price action here will be based on price trading down into this area to close in on this fair value gap. And on the daily, can we still see another price action to be regarded as order block? Yes, this continuous bullish candle here, sorry, this one bullish candle here is also regarded as an order block. It has volume. Okay, it must be regarded. Not, why didn't I consider the smaller candle but this one? This, because this is where you have volume, you have the body of the candle has more body. Okay, this is also considered as the order block. Now watch this. If I place my price, my line right on top of the body of the candle, where do you think it ends? Into the order block, just a little bit into the order block. Okay, just a little bit into, so price can actually trade into this area and then we can see the rally up. Okay, so if you set your trade around this area, price trades back into this area, set your trade around this area, what we are seeing is you put your stops below this, and it's so easy and simple. So all we are seeing here, price rallied up to take the high. All these areas that you are seeing here are short-term lows that price will just price had to take. So those who watched the previous video on sell side liquidity and buy side liquidity, so this is a sell side liquidity resting in here. This area, this particular area, is a sell side liquidity resting in here. That price is a short-term low that price can essentially take deep into, take it, and then it rallies away with it. Okay, so beautifully, this is what we are expecting on the market, as we are also looking at executing trades. Okay, so this is all about order blocks. When you refine your time and go to smaller time frame, you see a lot of them on the market like that. Okay, so this is where we'll end today's video. I wish you all the best in your trading. I don't want the video to be quite long. Okay, so I wish you all the best in your trading and enjoy. If you are new to this channel, do subscribe. If you have any question, you don't understand anything, kindly put it in the comment section and we would attend to you. Wish you all the best. Enjoy the rest of the day. See you in the next video.